In this video, we're going to talk about the chart of accounts in QuickBooks Online. The chart of accounts is the heart of the accounting system. The most common mistake that QuickBooks users make is they don't get very much acquainted with the chart of accounts, and then they really don't know how to categorize transactions when the income and the expenses come in from the bank. The chart of accounts is the list of categories that you use to organize all your transactions into, so essentially you can see them in financial reports, such as your profit and loss or the balance sheet. To access your chart of accounts, you click on the gear menu on the top right, and then you click on Chart of Accounts. Now, once you look at the chart of accounts, you can actually sort these by name by clicking on the header of the grid, by account type, by detail type, by balance, and so forth. The most logical way to sort your chart of accounts is going to be by account type. Because when you sort by account type, what you're going to see is all your accounts based on the order in which they fall into in your financial statements. For example, the principal financial statement is called the balance sheet. The very first account you see on the top is going to be your bank account. Naturally, that is going to be the very first account or group of accounts that you see. They're going to be under bank. Then you're going to see things like accounts receivable, current assets, other assets, fixed assets, and then you're going to go see your liability accounts. They're still on the balance sheet. You're going to see accounts like accounts payable, credit card accounts, which we haven't created one yet, other current liabilities, long-term liabilities, and equity. So all of those that I mentioned just now, from bank, which is an asset, all the way down to equity, which is in the equity section. Once you see this break between equity and income, all those accounts from equity to the top, they belong to your balance sheet. Now, the other way to quickly tell that the account belongs to the balance sheet is there's going to be a column called QuickBooks Balance, and there's always going to be a running balance in the QuickBooks Balance column. And the very last account, when they're sorted by account type, notice that the very last account that has a running balance, which happens to be 0, it's an equity account, and then you're going to see income right under it. So all the accounts under equity, starting from income and then going to cost of goods sold, which are your direct expenses, down to expenses, which are your operating expenses, and then all the way in the bottom to your what they call the extraordinary accounts. Let me go to the next page, which is going to be your other income and other expenses. Everything from income, cost of goods sold, expenses, other income, other expenses, those are going to belong in your profit and loss account. Okay, so that gives you an idea more or less where these two type of accounts fit. Now, the chart of accounts can actually have a limitation of so many accounts you can fit per page. So right now it's set up for 175, but you can go all the way to 300 per page. Some people could have more than 300 accounts. That is possible. Most versions of QuickBooks, Simple Start, Essentials, and Plus, are limited to 250 accounts anyway, so only the advanced version of QuickBooks Online can have more than 250. This particular chart of accounts that you're seeing has 135 accounts. So I'm not using the advanced edition, so I can add a whole bunch of accounts, get all the way to 250. Now, for the purposes of this video, and this is the point I want to make, is that if I go to reports and I go into profit and loss, for example, and I change the date to all dates and click on run report, notice that none of the accounts show because there's absolutely 0 activity on this account. For this example, I created a brand new account from scratch so we can kind of see what happens as we work the chart of accounts. I'm going to go to reports and do the same thing with the balance sheet, and I could do all dates or pick a particular date range. Let's do all dates, for example, click on run report, and then we get the exact same behavior. So again, just proving the point, this is a blank account, brand new account. Let me go back into the chart of accounts and let's talk about what are the typical first steps that we do. Now that we understand exactly what it is, what are the typical first steps that we do is we're going to create all the accounts that we know for a fact have a running balance. So let's start with that. I'm going to click on the new button on the top right, click on new. Now I do want to pause for a second. This little square pop-up that you see on your screen, it's one of the versions of QuickBooks Online show this. Depending on what version of QuickBooks Online you have, and you really can't tell by looking at it, this is just based on how QuickBooks creates the accounts, you may not see this square little pop-up. You might see a drawer that comes from the right-hand side. all the functionality is identical. All the buttons you can press are identical. They're just organized differently. And I'm a little bit later on, I'm going to switch to a different company file that actually has the drawer so you can see the two differences. So I do want to show you with both. So don't freak out if your screen doesn't look like this. It's fine. We're actually going to cover what the other screen looks like. Just kind of follow along the concepts themselves, because those are going to be really important. Then I'm going to choose the type of account I'm going to create. Let's say I'm going to enter all my bank accounts that already have a running balance from the first date that I'm going to decide to enter transactions inside QuickBooks. So for the examples of this video, let's just assume that I created a brand new account and I'm going to start January 1st, 2024. That means that I need to enter all the balances that come all the way up to December 31st, 2023, because I want to start January 1st, 2024. And this is the time that I want to go back into QuickBooks and enter transactions so I can have a clean tax year, for example. So I'm going to enter all my bank accounts. So I'm going to select bank as the account type. On the detail type, I'm going to pick the best possible option here. So let's say it's a checking account. And then under name, I'm going to put the name of the bank. So let's say this is in Chase. And then I'm going to put whether it's checking or savings as the name. And this is the part where you can actually put whatever you want, really. But this is how I like to do it. And then put the last 4 digits of the account, typically the easiest way to identify. Now, some people create an operating account, a payroll account, a tax savings account. Okay, that's fine. You can do that. And you can add that naming to your naming convention if you want to. The description is optional. You actually do not need to create that. And then sub-account, we'll discuss that later on as we start creating more accounts. Now, down here in the bottom, it says, when do you want to start tracking your finances in QuickBooks from this account? And as I mentioned earlier, we're going to start January 1st, 2024. So we're going to click on Other, and then we're going to specifically select January 1st, 2024, essentially letting them know that if I do enter an opening balance, that opening balance is supposed to be booked 12/31/2023. So then I'm going to go get my actual physical bank statement for December for that bank account, and I'm going to read the ending balance from the bank statement, and I'm going to enter it in there. So let's say that's $45,890.63. So I read that from the bank statement for the ending balance of 12/31/2023, and then I click on Save and Close. You will notice that immediately you're going to see the account gets created in here. The QuickBooks balance is going to be that beginning balance. And then I'm going to scroll down so you can see something, because there's going to be a balancing entry under opening balance equity. You're going to see a balance entry for the same exact dollar amount. Every time I add an asset like a bank account, the opening balance equity is going to go up. Every time I add a liability, such as a credit card or a loan, that opening balance is going to go down. Essentially keeping track of what's the accumulated value of your business before we start doing accounting in QuickBooks. Okay, so we did that bank account. Let's do another bank account. I'm going to click on New, and let's say I have another bank account, but this time around it's a savings account, and it happens to be, let's say, in Bank of America. So I'll put BOA savings and then the last 4 digits of the account. Then I'm going to choose the same thing. I'm going to choose the beginning date that I'm going to start entering transactions in this account. Then I'm going to go read the ending balance from the statement. Let's say it's 100,000 flat. I'll put that in there and click Save and Close. So now I have my 2 beginning balances in there. And let's say that's it. Let's say I don't have any more bank accounts. Notice QuickBooks created a cash account, which is going to be your petty cash account. Is where you're going to be holding cash. Maybe your customers pay you in cash. Maybe you took out an ATM cash withdrawal. You're keeping cash in there and you might make some expenditures. Keep track of those receipts, and that's going to be sort of the account that's not going to be tracked through the bank, but you're going to be tracking manually. Now you can change the name of that account if you don't like it to be called cash. You want to call it petty cash, for example. We click on Edit, and then we change the name from cash to petty cash, and then it's up to you. And one thing I want to make clear is there are some businesses where they have multiple employees holding petty cash, and then what you can do is let me just edit that and put petty cash. You can put petty cash John, petty cash Hector, petty cash Mary, or whatever, and then you can keep track of everybody's petty cash per se. So depending on how you manage cash, some businesses will never touch cash, so you not even need that. And if you don't want that account, you can just click on the drop-down menu and click on Make Inactive or Delete. Now, one thing is QuickBooks Online does create a chart of accounts for you. And as we mentioned earlier, it was 135 accounts. You can delete them. You don't have to use them, but that's what QuickBooks suggests that you use. So we entered both of our bank accounts. Let's now go down here and create, let's say, a fixed asset. So let's say that I want to put a truck that I have in here. Now, QuickBooks has a general category for vehicle. So maybe I want to use that and then make a sub account. So that's the example we're going to show you. So I'm going to click on new on the top right. Under account type, I'm going to go down to fixed asset because that's where a truck would go. Under detail type, I'm going to go look for the best possible category that matches what I'm trying to do. So vehicles. And then I'm going to call this by what it is. So let's say this is a Ford F-150. I typically like to put the acquisition date on it. It's easier for me to do that. So I put that in parentheses. So let's say I bought it May 19th, 2019 or something like that. Okay. So that helps me understand, especially if I have multiple F-150s, it will help me understand which one specifically it is. You can go further and say that this is a 2019 model. And then let's say you have multiple 2019 models, you can do white, black, whatever. So you get to pick whatever name makes the most sense for you, and you put that in the balance sheet. Then it says here, when do you want to start tracking finances from this account? We're going to do the same thing. We're going to do January 1st. And then this gets a little trickier because you have to go find your, well, at some point when we do the actual loan, we're going to have to go find what the actual loan balance is. But this is the fixed asset. So this one's actually not going to be the loan balance. This is going to be the original purchase price of the vehicle minus depreciation. Now that gets tricky. You might need an accountant to help you with that. For the time being, just to keep it simple, we're going to put the original purchase price of the vehicle. Now you can always look in your balance sheet in your tax return. If you had an accountant or a CPA do your tax return, your balance sheet will probably keep track of all your fixed assets, all the depreciations, and then maybe you have a separate fixed asset schedule that tells you exactly how much they booked the value of the vehicle and the accumulated depreciation. So that could help you figure out what number goes in here. For the time being, I'm going to keep it simple. Let's say I spent $45,608 on this car out the door with taxes and everything. And then I'm going to click on save and close. So this is the original value of the vehicle. Again, you might need an accountant to kind of help you make sure you enter the accumulated depreciation and all that stuff. Now, in this particular case, I created the vehicle. I'm going to go back and edit it. And I didn't make it a sub account of the existing vehicle category. I think I want to do that. So I'm going to click this little checkbox that says is sub account. Click on the drop down and then go look for the vehicle category. That way it's all organized sort of in the same grouping. Then I click on save and close. And then you will notice as I scroll down, now I see a category for vehicles, and then I see the Ford in there. If I happen to have another vehicle, I can create that vehicle by clicking on new, doing the exact same process. So going down here to fixed assets, detail type, let's go down to vehicles. Let's say this one is a Ford F-150 as well, but this is from 2021. And then this one happens to be black. And let's say I purchased that on 12/31/2020 or something like that. And the same thing, I'm going to pick the original purchase price of this vehicle. I'm going to be consistent with the beginning date of all the transactions that we're going to be managing. And let's say the purchase price was $51,985. Click save and close. So now as I go down and scroll down to my vehicles, and it looks like I also forgot to put this one as a sub account. So let's go back in that and click on edit. So I didn't do that on purpose. That was my mistake. But it's good because you get to see the actual process here. So I'm going to put it under vehicles, which is a fixed asset. You got to be very careful because it happens to be a vehicle expense account as well. And that's not where I want to put it. Even if I try to put it there and click save and close, it's not going to let me because I can't put a sub account of a fixed asset into an expense. So it needs to be the exact same category for that to work anyway. So let's put here vehicle and let's do the fixed assets and then click save and close. Perfect. So now as I scroll down, now I see that I have my vehicles category and both of my fixed assets in there with the right labeling, with the right $2 amounts, and then the sum of the two right under that parent account. If I scroll down and I look at my opening balance equity, notice that all the accounts that I put that are assets are increasing my opening balance equity account. Let's start creating some loans. So I'm going to go to New, then I'm going to click on the drop-down menu, and then I'm going to click on long-term liabilities. So typically any loans that you have more than a year left to pay, it's going to be a long-term liability. And then we can call this a note payable or other long-term liability. It doesn't matter. And then we're going to put here Ford. Let's do here Ford truck loan. And if I happen to have two of them, I probably want to identify them by the white truck or the black truck or whatever it is. So we'll put here white. And then I'm going to come here, same thing. I'm going to select the beginning of the year, which is the date that we decided to start our finances. And then I'm going to get, this is actually the loan balance, not the original purchase price. I'm going to get the actual statement from Ford Finance or whatever. I'm going to get the statement from the bank, and that shows the ending balance as of 12/31/2023. And let's say for this one was $23,965. I click on Save and Close. And then I'll do the same thing for the other one. So I'm going to go to New, go drop down menu, get the other physical statement, long-term liability. And let's say this is the Ford truck loan black. And then other, same thing, 1/1/2024. And then this one happens to be, let's say, 38,778, something like that. Save and close. So I entered two loans, which are two liabilities. As I scroll down, scroll all the way down, now I see my two long-term liabilities. They show up in here. Now you should notice that my opening balance equity is going down. And this is the exercise you have to do. You have to create all your assets, all your liabilities, and all of these balances. Essentially, they're going to give you the opening balance equity, which is the net worth of your business at that moment in time when you started tracking your finances. In this case, January 1st, 2024. Okay, let's do one more exercise, which is our credit cards. So I'm going to go to New. Then I'm going to get all my credit card statements. I'm going to click here, credit card. And this one's a little bit tricky because credit cards don't have clean months like bank accounts or loans. A credit card can end in the 15th of the month. It can end at the 20th of the month. So that gets a little bit tricky. So essentially what I want to do is, let me start with, let's say my Amex Platinum or something like that. And we'll put the last four digits of the account. What I want to do is I want to do the same thing here. I want to do 1/1/2024. But because I can't get that information from the statement, I have to get the closing date as of the last time that the credit card closed. Let's say this happens to be December 15th. I can put that number there, but then when I go reconcile, it's not going to work because I will be missing the transactions from December 15th to the end of the year. So for this to actually work, you have to put in here combined the balance as of December 15th and all the transactions in between, plus and minuses. You have to add them together in order to have a correct beginning balance. And then you can then start creating your transactions January 1st, 2024, and you should have a clean beginning balance. That's one option. The other option that we have, and this could happen like this, is I want to maybe put here the ending date of the last statement, and then essentially you will be also entering some 2023 transactions in QuickBooks in order to catch up. And then when you go reconcile, let's say January 15th, 2024, you have a full month's worth of statements, and your QuickBooks is going to have some transactions for 2023. So that's the part that just gets a little bit tricky. So that could be the other option that you have. So let's say this is 12,489.60. And again, we're picking the method where we're taking the actual physical statement. Let's say they close on the 15th. We're taking the ending balance on the 14th. And then when we go enter transactions, we're going to choose to catch up those last transactions of the year. And again, who cares? We put some things for 2023 here, even though it wasn't our intention, but we were able to do a clean reconciliation. Now, very, very important. I do have a video that talks about reconciling, entirely different process. We won't cover that in here, but keep that in mind because this is like the precursor of doing any sort of bank reconciliations. So we'll do save and close, and there is my American Express credit card. Now let's do one more credit card, and this is going to be a situation where I have a credit card and then multiple sub-accounts under it or multiple physical cards. And that's a really important one because when you connect your banks your banks usually download the activities in each of the sub-accounts. But then when you reconcile the master parent account. So I'll give you an example. So let's say I have a Chase account with 3 extensions or 3 users. So I'm going to start by creating let's say the parent account. So let's do Chase, Visa, let's call it Rewards Inc. Plus or whatever it happens to be. And that's going to be our parent account. That's going to be like our overall account that we're going to reconcile. I'm going to do the same thing, do the beginning balance. Let's say I picked up the statement and that closes on the 20th. So we're going to go back to December 20th, and then we're going to put the physical balance on December 20th, and we're going to choose the technique where we're going to enter the catch-up transactions for December so we can have a clean reconciliation month. So let's say this happens to be 15,446.30, and then we'll do save and close. So that's my parent account, that's my master account, and the beginning balance is going to be carried there. But I have to create each of the extensions, each of the physical cards that are under this one statement and putting them as a sub account. So I'm going to come in here and select credit card, and then I'm going to choose, let's say, Hector, and then put the last 4 digits. That's my card, that's Hector's card, and I'll put that as a sub account, in this case of Chase Visa Inc. Rewards. And then for this one, I don't enter a beginning balance because the beginning balance is being carried by the parent account, by the master account. Then I'm going to click on Save and New because I'm going to keep creating accounts. And let's say the next one, I guess new didn't work. Let's do new one more time. Let's go and select credit card again. And we're going to put here, let's say, Maria. This is the user. Make that a sub account of the same Chase Rewards Plus. And then click on Save and New. Let's scroll down over here and see that we have my Chase Inc. and my 2 sub-users. Let's do one more. We'll pick here credit card. Hopefully you're getting the hang of this at this point. Let's do Carlos and put the last 4 digits. Make it a sub-account and look for that account, the Rewards Plus Inc. And then no beginning balance, again, because the master parent account has that save and close. And let's say that's it. Let's say that's all of our assets and our liabilities, and we used our chart of accounts to build that up. So now let's go to reports and let's go into balance sheet, and then we're going to select last fiscal year. That way, last fiscal year, we know exactly what our balance sheet looked like before I start using QuickBooks. Notice that I'm going to have, let's click on run report. Actually, let's do the beginning of the year. That might be easier because sometimes those transactions get created at the beginning of the year. So let's do the beginning of the year and then click on run report. And then we're going to get to see all of our balances. So here's the opening balances that we created. Here's the opening balances of the vehicles. Then we went down here and we have both of our vehicle loans. We have our 2 credit cards, the Amex and the Chase Reward. And then we have our opening balance equity that adds up in there. Now, a couple of things. I'm going to click on all of these amounts. And this is sort of like general cleanup. Sometimes these beginning balances get created at the very beginning of the year, January 1st. I actually prefer to bring those back and make sure that those beginning balances are booked on the last of the year, because I don't want this year to show like a weird transaction that technically doesn't belong to this year because that comes from previous year. So you can click on all of these balances in your reports. You can click on them and inspect each and every one of them. And notice that I'm manually making sure that they hit 12/31/2023, which is what QuickBooks should have done in the first place. It's just, sometimes it doesn't work exact way you want it. So I'm just going into each one of these transactions that were created, and I'm changing the dates to 12/31/2023 to have a real clean balance sheet. And then when I run it for last year, it actually shows up full and complete, different than how it was showing when I first tried to do the last year balance sheet. And let's say these credit cards too. I think these should be good because both of these were entered, I believe, prior, because those we had a different date for those. If you remember, those actually were done in December. So the credit cards kind of obey that rule, that concept that I mentioned, but the other ones didn't. So let's go back and run the balance sheet account one more time, and let's just make sure that all of the accounts that we want them to show up for last year, because this is all the last year exercise, they're showing in there. So let's see, I got both my bank accounts. Great. I have my loan accounts. My assets. I have my credit cards. I'm still missing the loans. So if I push this date up one more day, the loans should show up in here. And the same thing, I want to click on that, go into each one and bring that back. So that's going to be, the most clean as possible when we run a previous year. And there's a very specific reason for this, which we're about to show you. And this is more of a sort of nerdy, technical accounting reason why we do this. But let's just run the balance sheet one more time. Let's make sure we get a clean balance sheet here. So let's do a last fiscal year, last year. Okay, there we go. So there's my 2 banks, there's my 2 assets, perfect. There's my 2 loans and my 2 credit cards, beautiful. Okay, so now what I want to do, and again, this is a technical thing. I do want to cover in this video, even though this video is more for beginners. I do not like opening balance equity accounts. There's actually no such thing as an opening balance equity account. That's a made up concept from QuickBooks. Okay, in the accounting world, opening balance equity is actually referred to as retained earnings. Retained earnings. So what I'm going to do is I'm going to take this number 152,804.73. Let me go back here for a second. I'm going to take that number and then I'm going to do a journal entry to move it out of opening balance equity and into retained earnings. And I do want to mention something. Again, this is the type of stuff that you might need an accountant for. Journal entries are tricky. I'm going to go into journal entry and then I'm going to date this journal entry 12/31/2023, and then I'm going to move it from opening balance equity. So I'm going to move it out of equity, which means I have to debit it. And again, this is the accounting stuff. This is where you might need an accountant to help you with this stuff. And one of the interesting things about this is most accountants never want to touch the retained earnings account. Actually, I agree with that. You should never be touching retained earnings account. This is a very special situation where I'm taking last year's. This is not a current clean year that I'm doing. I'm taking last year's entry for the beginning balances and I'm cleaning it up into retained earnings because that's where it's supposed to go. Again, this part, super nerdy, maybe something you could have skipped, but this is like, for me, the way I want to see a balance sheet. I want it to be right. So that's kind of where it belongs. And to take it one step further, it might not all be retained earnings. It could be retained earnings. It could be beginning capital. It could be additional paid-in capital. There's all sorts of layers of complexity in the equity account where you track not just the value of your business, but the accumulated the accumulated capital that each of the business owners have in that business. So it gets a little bit trickier. I won't cover that, but you do need to maybe discuss that with your accountant to make sure your QuickBooks is fully cleaned up. Okay, so that's the balance sheet, and that's the exercise of working balance sheet accounts in the chart of accounts. Let's go back to the chart of accounts and let's talk about profit and loss accounts. Whole another ball game. So we're going to scroll down here. We're going to see the very last account that has a running balance. So right here, the very last account had a running balance. That's my last equity account. Then we're going to start looking at our profit and loss accounts, which starts with the income account. There's a whole bunch of accounts in here. The default chart of accounts in QuickBooks created billable expense income, refunds to customers, sales of product income, services, uncategorized income. Now, I have my own spreadsheet that I put together. This is for sanity check. As an accountant, helping hundreds of people a year get on QuickBooks Online. Sometimes I like using my own chart of accounts. So I have my own profit and loss accounts that I keep track of. This is because I prefer it this way. And in my same spreadsheet, I have a list of my the default accounts that QuickBooks Online has. That way I can compare, the original one that QuickBooks has versus the one that I like to use. Now, quick side note, for all my clients that want me to set up the chart of accounts, or not just me, but my team, I typically give them my chart of accounts and I load my chart of accounts in there. It gets a little tricky when it's an existing account because there's existing transactions that need to be reclassified. But generally, when it's a brand new account, I like using my own chart of accounts for my own reasons. And the way I import the chart of accounts into QuickBooks is I export this into Excel, and then I go in here into the chart of accounts, click on the drop-down menu, and then click on Import. And then once I click on Import, I click on browse and I go choose the chart of accounts, a file that I have in Excel in my computer somewhere. And then once I'm just gonna pick this thing, although even though that's not it, I'm gonna load an Excel file or a CSV file, click on next, and then I'm gonna map, what's what in here. And then once I map it, I go to the next screen, and then the next screen tells me, okay, this is all the accounts that you want to import, and this is all of the account types that each one is supposed to be, and then you start loading that in there. Again, this wasn't an actual chart of accounts file, but that's how you import your own chart of accounts. So if you happen to have a super clean, beautiful chart of accounts in Excel that you like to use, maybe something your accountant gave you, maybe you yourself are an accountant and you have your own template, that's how you would import it. You would go into the little drop-down menu next to new and click on import, okay? And again, I'm gonna scroll down here and then I'm gonna go through the income accounts. And let's say I don't like this configuration. Let's say I have one account that is for on-site services and one account that is for, let's say, remote services. So I don't like any of the income accounts that QuickBooks has here for me. So I can create my own categories, my own income categories. So I'm gonna go to new. I'm gonna select the account type. I'm gonna scroll down to income, and then I'm gonna pick on detail type, the one that makes the most sense. So let's say service fee income. And then I'm gonna put in here on-site services, okay? And then I'll try to do save and new, see if it works this time. Sometimes it does, sometimes it doesn't. Let's go to new again. And let's click on the drop-down menu, go to income, and then I'm gonna select, let's say, service fee income again, and then this will be remote services. So let's say all of my sales of whatever I do, service, consulting, whatever it is, essentially all of the income is gonna fall into just those two categories. Let's just scroll down here. It's gonna be the remote services or the on-site services. Now, I can start getting rid of the accounts that QuickBooks gives me. So for example, this one called refund to customers, I can click on the drop-down menu and click on make inactive, and I get rid of that. It doesn't disappear, but it gets removed from there. Some accounts might give you issues like this sales of product income and services. I selected 3, then I'm gonna scroll all the way up in the top. I'm gonna click on batch actions and click on make inactive. So I'm gonna try to make 3 inactive. But anytime there's an error that it says, look, I can't make that inactive because I have it tied to a product or service, then you won't be able to. So I'll do the ones that it can, and then I'm gonna scroll down one more time, see what it allowed me to get rid of and what it kept. So it looks like it got rid of the other 2, but it kept this one here called services. And then there's this one called uncategorized income. Essentially, there's 3 accounts you can't get rid of. One is billable expense income. If you get rid of that, it comes back 10 times. So don't get rid of it. Billable expense income, leave it there. And on categorized income, same thing. If you delete it, it keeps coming back. So you have to keep that in there. It's because those 2 accounts are used by QuickBooks to fulfill a very specific mechanic. So you might need to keep those in there. So just leave them in there for now. But I do want to address this one, services that I couldn't get rid of. Let me just try to do it one more time so you can see. It says I can't use it because a product or service is tied to that. So we're going to take a quick break out of chart of accounts, and then we're going to talk about products and services, because this is an important link between your items and your accounts. So I'm going to click on the gear menu on the top right. I'm going to go to an entirely different section of QuickBooks, which is products and services. And these are going to be the individual items, the things that you sell or buy that you're going to track in transactions, and those tie or map to accounts. So then when you create transactions with those items, QuickBooks knows where to categorize them. So let's add a new item here. I'm in the products and services list, and if I go to new, I'm gonna add a new item. I'm gonna call it a service, and I'm gonna say remote 1 hour support or something like that. And just keep in mind, this is the name of the item, the product or service that's gonna show up in the transaction like an invoice. Okay. Then in here I can put remote services for IT support with level 1 tech or something like that. Now under income account, this is where you pick which category this item ties into. And notice this is tied to services, which is why I couldn't delete the service account. But I'm gonna tie this one called remote 1 hour support. I'm gonna tie it to my remote account. Actually, let me X out of that and click on refresh one more time, because I just changed the accounts, and sometimes it takes a few minutes for the accounts and the items to sync together. So let's go back into add item. Let's do service. Let's do remote 1 hour support. Okay, I'm gonna copy and paste this into the description. Click on the drop down menu, and now I should see my remote services. There we go. And let's say this is what we charge $75 an hour for. And if I plan to pay a vendor, pay a contractor or something like that for the service and use the same item, then I want to put the same thing here and put paid to contractor or something like that. And then on their expense account, I'm going to put the expense account, maybe something under cost of goods sold called subcontractor expenses or something like that. If I'm going to pay a third party to fulfill the work that I'm selling to these clients, and let's say I pay the third party $40 an hour or something like that. Let's put $40 an hour. And if I have a very specific, unique person that I always use, you can put that on their preferred vendor, but you don't have. Now, this option to make a product or service eligible for a purchase transaction, that's an option. If I uncheck that, that goes away completely. Okay. So let's click Save and Close. And there we go. Here's my remote 1 hour support. Now, this item called services, I'm going to edit it. And I'm going to tie it to, let's say, the remote services. Click on Save and Close. And then this one called hours, and QuickBooks creates this for you. I'm going to tie it to remote services. Click Save and Close. And the reason why I did that is because I don't want any items to tie to the generic services account, so I can actually delete it. So I'm going to click on the gear menu and check income account here, so it shows up in the list. That way I'm just double checking that nothing is tying to that generic services account. Then I'm going to go back into my gear menu. I'm going to go back into chart of accounts, and then I'm going to see if it lets me delete that services income account that I don't want. So let me scroll down here and go into services, and let's now cross our fingers, click on make inactive, click on make inactive, and beautiful, it let me do it. So that's the tie between your items and your accounts. Let's see if I can delete this sale of product income. Does it let me do that one too? Yes, it does. So now I'm down to the two accounts that I actually want, on-site services and remote services, and the two that I can delete, which is uncategorized and billing expense income. So that's how you create accounts, your own categories. That's how you tie them to products and services. And as you go down, you can check all your cost of goods sold, all your expenses, and check which is the account or list of categories that you want when you actually look at your reports. Okay, so let's take a look at that. Let's go into reports and let's go into profit and loss, and let's see what a profit and loss looks like with the chart of accounts the way we have it. Now, there are no transactions in my profit and loss because this is a blank file. So when I run the profit and loss, it just shows a bunch of zeros. Now, one of the cool things about reports in QuickBooks Online is there's an option for you to force show accounts even if they don't have activity. So if I click here, it says all, and then click on run reports, all the accounts in my chart of accounts should show. But there's one caveat. For this to show, there has to be at least one transaction. So at least one transaction in there, all the accounts will show. So we're going to create one transaction to make it very simple here. So I'm going to go into new, I'm going to go into invoice. I'm going to create a customer here really quick. Let's do ABC customer. And I have an entirely different video that covers invoicing and accounts receivable. Make sure you check the description, all the videos that I have walking you through how to use QuickBooks. But essentially, I'm going to use this item that we created called remote 1 hour support. Let's say that we're charging for 3 hours of that. And we're going to date this this year at some point. That way it shows up in the current report that we're looking at. And then we're going to click on Save and Close. So as long as there's one transaction, this is a very interesting thing about QuickBooks. As long as there's one transaction in here, I can click on where it says all rows and active columns, click on all, and then essentially my entire chart of accounts will show here. Now, unfortunately, it also shows all the deleted accounts, which is kind of a bummer because it does kind of muck with the organization of my chart of accounts. So you do want to be careful with creating and deleting, because as time goes by, if you want to use this option to show all, you're going to be showing, or you're going to be seeing this deleted account. So that's kind of the bummer. Now, when you look at your profit and loss, and we have an entirely different video that talks about manipulating reports and customizing reports. But I'm just going to show you something really quick. I'm going to click on customize here, and then I'm going to click on accept zero amounts, basically to show the zeros, which makes the report a lot easier to see. I'm going to click run report. And I do want to warn you one more thing. I'm recording this video in January of 2024, and QuickBooks is going through a transition period where these profit and loss reports are going to look different. They're going to have an entirely different screen, and these settings are going to be all over the place. You should have the same settings, but it won't be the same. This is not a reports video, and I will be doing updated videos focused on just reports. All I'm trying to do is illustrate how chart of accounts flow information into your reports. Now, let's say, for example, that this one called refunds to customer, sales deleted, sales of product income and services, I want to kind of just nest them under one general category. That way it's easier for me to just visually hide them per se if I want to. So let's go back into the chart of accounts. Okay, and I'm going to open chart of accounts in a new tab. That way I can keep my reports here live, and I can just click refresh when I'm ready to look at it again. Then I'm going to look at these accounts that were deleted. So I'm going to click on the settings button on the right hand side of the screen and click on include inactive. That way it's going to show me the deleted accounts. For some reason, QuickBooks calls deleted and inactive accounts uses the same term. We're going to go down here and look at all my accounts that are deleted. I'm going to create a general category. Let's go to new here. I'm going to make it income. And then I'll pick any of these categories here. It doesn't matter. And I'm going to call this old/deleted accounts. And I think you're starting to kind of read between the lines on what I'm going to do. Let's hit save and close here. And then I'm going to go look at all my accounts that were deleted. Okay. Let's scroll down here until I find it. There we go. Let's go to this one, go to make active. So I'm making it active temporarily. I'm going to edit it, make it a sub account of my deleted. Perfect. Then click save and close. Then I'm going to go to my next one, this refunds to customers. Click make active, edit, delete, make that a sub account of my deleted group. And by the way, there's nothing wrong with an account called refunds to customers. You can have that. Just because I'm deleting it doesn't mean that you need to delete it. It's just I don't want it, right? So you need to plan with your accounting team exactly how you want your accounts to look. This is a very personal, very specific to your company decision that you need to make. So when I click on edit and then make that put that under the deleted group, and then click save and close. And now all my accounts have been deleted, which I temporarily made inactive so I can edit them. They're showing up here. So now I can just select all these here and then go into batch actions, make inactive, and I should be able to make them all inactive in one shot, with the exception of all the ones that have, scroll down here to income. So with the exception to the parent account that still needs to show up in there, I can only make the sub accounts, inactive. The parent account is the one that has to stay active. Okay, so when I go back into my profit and loss report and click on run report, what's going to happen is now all these deleted accounts get nested under that one category, and then I can just click on the little triangle and then collapse it, and then it cleans up the P&L for me. And essentially the purpose of doing this sort of work on your chart of accounts is when you go print your chart, your profit and loss report, and you have 2, 3, 4 pages that you're monitoring your numbers in, you're going to lose the ability to really analyze your numbers, because you print a report in 4 pages is too much. So you want to work as hard as possible to not have, so the goal is not to have as many accounts as possible. It's actually the opposite. The account is to have as little accounts as possible that provide the most amount of rich information you need for your business based on your needs. Okay. So as we go down, let's start looking at all the other categories. We have advertising and marketing. Let's see if we like that. Let's say I want to have something called traditional media or something like that, or radio ads. I can do that. I can come back into my chart of accounts, go to new, and then go down to expense. And then I'm going to call this one radio ads. Click on the sub account, drop down menu, and then that's under advertising and marketing. And then click on save and close. I created one more category, switch back to my profit and loss. There's 3 there now. So if I refresh then I expect to see now 4 in there. Now, do you need to have all this? No, you don't. Some people just have advertising and marketing, no sub-accounts, and they throw everything in there. This is personal based on your business needs. You need to figure out how many accounts you have. Under employee benefits, you see there's a whole bunch of sub-accounts there, pretty clear. We're gonna collapse that. Under general business expense, again, a whole bunch of other categories. Let's say we like that, and we collapse that. Under insurance, we have all these sub-accounts. That's great, beautiful. And again, your chart of accounts might look different. Keep that in mind. This is the default chart of accounts that was created with the company file I created in QuickBooks. Yours could look completely different. There's actually no guarantee yours will look anything like this. And then there's interest paid. There's legal and accounting services. There's meals with clients and travel meals. There's office expenses, and then all these subcategories. There is payroll expenses, and in here you would have stuff like payroll tax and that sort of thing, even though there's a category for taxes paid and payroll taxes is in there. Let's say I don't want payroll taxes to be under taxes paid. Let's say I want it under payroll taxes. So I go back into my chart of accounts. I can search the specific account here. That way it's there. So taxes paid. Okay, so very specific account called taxes paid. I'm gonna click on edit. And this is my taxes paid account. Actually, I'm looking for the one under it, which is payroll taxes, I believe. Sorry. So let's look at payroll taxes. This one right here, payroll taxes. We're gonna edit that one, and then make that a sub account instead of taxes paid. I want to move it and make it a sub account of payroll taxes. Again, this is not the rule, or it needs to be like that or not. This is based on your needs. Let's run the report. Let's go down here one more time, and then under payroll taxes, now I have. Under payroll expenses, I have both payroll taxes and wages. So you're going to go through all these, and you're going to figure out what works best for you. Look, there's utilities. There's uncategorized expense. This is another example. Uncategorized expense is one that you cannot change. QuickBooks gives you that. You have to leave that in there, because when you connect your banks and QuickBooks doesn't know where to categorize stuff, that's where it's going to put it. It's going to put it under uncategorized expense. Now, sometimes you can merge accounts that are redundant. So let's say, for example, that you think electricity, heating, and cooling are redundant. You can collapse them too, or you can merge them. And let's say, for example, disposal, weight fees, and water and sewer, we also want to do the same thing with that. So let's do one at a time. Let's take this one called heating and cooling. I'm just going to copy the name of it. And actually, we're going to collapse that, merge that with electricity. So I'm going to copy electricity, actually. I'm going to copy electricity. Then I'm going to go find heating and cooling in the chart of accounts. Let's type here, heating and cooling. There we go. We're going to edit that, and we're going to change the name from heating and cooling to electricity. See, I had copied it, so I pasted it. Then when I click on save and close, QuickBooks says, hey, wait a second. That account, it's already duplicated. Would you like to merge it? Then you're going to say yes. Now, these chart of account screens, they look different for different people. Sometimes you will have a drawer on the right-hand side that will be showing the mechanics of creating these accounts. And instead of having that pop-up, they will look slightly different. So I'm going to show you what that looks like, just in case your screen looks one way or the other. This is the tricky part of dealing with QuickBooks. Sometimes you'll have one screen that behaves a certain way versus others that behave a different way depending on your company file. So I switched modes, so now you're going to see the chart of accounts behave a little bit different when you create new accounts. But anyway, let's go back into here, and let's say that this one, disposal weight fees, this is the one that we're going to condense into water and sewer. So I'm going to copy water and sewer. I'm going to go back into my chart of accounts. I'm going to look for the waste fees, disposal and weight fees. I'm going to click on edit, and see now it's a drawer on the right hand side. So depending on, again, your QuickBooks might have the pop-up you saw earlier, or it might have the drawer on the right hand side, and they work very similar, and we'll kind of show you how this one works. So I'm going to change the account name in here to match water and sewer. It's under the category utilities, so it's under the subcategory of utilities. And then now the warning for the merge is actually the 2 lines highlighted in red, letting you know this is going to be merged. Then when I click on save, now we get, instead of a pop-up that says, would you like to merge them? You get the message right there inside the drawer. And then you click on merge accounts, and then click on save. and then does the same process. So it kind of gives you an idea more or less how that functions. Let's say I want to go back in here, click on run report, go look at my accounts, and you're going to see the old, go down to utilities, you're going to see the old accounts that were deleted. Again, that's only because we're forcing them to show because we did the all options. Once you enter transactions, anything that's a 0 gets automatically deleted. But let's say that this one called water and sewer, I want to add water, sewer, and disposal. I want to rename it. So I go back into the chart of accounts. I'll type water. Okay, I'm going to click on the edit menu. And then now it's using the drawer on the right hand side. So we're going to change the name from water, sewer, and disposal fees. Notice that there's always a description. You can keep it, you can delete it. The descriptions really don't do anything other than kind of help you, guide you through the process. Let's click on save. And that does that. So I go back into my profit and loss, click on run, and then scroll down to utilities. And there we go. Here's all my categories. Let's go down to travel. We have airfare, hotels, taxi and rideshare, vehicle rental. Let's say I also want to have a category for miscellaneous things that I buy at the airport, for example. So one called miscellaneous travel. So I want to create a category under travel just called miscellaneous travel. And that's typically a good idea to have. Like, I don't like miscellaneous accounts, but where they're under a general category, I'm okay with that. So I can have one called miscellaneous travel. I can have miscellaneous utilities. I can have miscellaneous payroll. I can have miscellaneous office, that sort of thing. So there's sort of a catch-up option, a catch-all option inside those parent categories. So let's go and create a miscellaneous travel. So let's come in here. Let's go to new. Now we have the drawer on the right-hand side. We're going to pick expenses. Remember, income and expenses are profit and loss accounts. Under save account this is where I'm going to go look for that travel account. So see, the mechanics are a little bit different. It doesn't have the checkbox that says sub account of. You just pick whether it's going to be part of the general expenses, or if you don't pick the parent general expenses, then automatically by picking anything that's under that, that would be like sub account of. So let's go down to travel, and then we're going to call this one miscellaneous travel. Okay. Yes, I'm putting it uppercase. I know, drives some people with OCD crazy. So let's go to save, and let's go back to our profit and loss and click on run report so we know exactly what's happening. And there's my miscellaneous travel. Okay. Now, one thing to keep in mind, QuickBooks always orders accounts in alphabetical order, unless you turn on account numbers. If you turn on an account number, then it's going to use the account number for ordering, which is my preferred method of looking at accounts. So how would that work? So let's click on the gear menu. Let's go to account and settings, and let's go down to advanced. And then here where it says chart of accounts, we're going to click on enable chart of accounts and show the numbers. So we're going to turn them on so they show up in the chart of accounts, and we're going to show them so QuickBooks can order it by account numbers. Then I'm going to click on save and click on done. And most beginner users don't like account numbers. They feel it confuses them. Accountants love it, account numbers. So we got to figure out somewhere in between. I think it's not that bad. Once you get used to using account numbers, it's pretty easy. As I mentioned earlier, I have my own chart of accounts that already has all the numbers. So obviously for me, it's easy to deal with that because every single client I have uses the same account, the same number combination. So as I categorize stuff, I start memorizing the numbers, and sometimes I just look at an expense and just say, oh yeah, that's 52900 or something like that. So that's the cool thing about knowing your chart of your numbers in your chart of accounts, that you can either recall it by name or recall it by number. We'll show you an example of that. So let's come back into our chart of accounts, and I'm going to click on the gear menu. Actually, let me click on refresh because I just turned on the account numbers. So this screen now needs to recognize that we have account numbers. And I'm going to click on the gear menu and make sure that the number, it's enabled. So now I see that my numbers are enabled, and I'm going to start adding numbers to these accounts. And this is kind of a long process, I know, but this is the problem with the default chart of accounts that don't give you good account numbers. So for example, I'm going to add account numbers only to the ones that I'm going to use. So I'm going to use on-site services and remote services. Those are the two that I want to use, and everything else I leave it without a number. You can do that. So let's go into the little pencil button here and then go down to each of the accounts that I want to edit the number for. So let's say that for my on-site services, I'm gonna call this 40101, and then remote services is 40102. Now, rule of thumb, income accounts start with 4, cost of goods sold accounts start with 5, expense accounts start with 6 or 7, and then other income and other expense is gonna be 8 or 9. And then assets, let me just go up here, assets like bank accounts, those start with 1s. So let's do 10101, 10102, 10103. Liabilities start with 2. So for example, let's say I'm going to go down to my credit cards and do 20100, 20101, 20102. Notice the logic that I'm using for these. Okay, I'm trying to keep them into like logical sequence, so when they're organized like that. And then the equity accounts, they all start with 3. So let's do 30101, and then I go down here and just assign actually opening balance equity, I don't use that one. So I would never put a number on something that I don't mean to use. And that's kind of like how I see logic on these things, where if I know for a fact I don't mean to use it, then I don't put an account number on it. So I'm just going in here. These are the equity accounts. So I'm putting account numbers on those. And again, I'm not going to do it in all of them. I just kind of want to show you the process. Let's go down here to travel. And let's say travel is going to be 60700. And then my expenses are going to be 60701. I want miscellaneous to be the last one. So let's do 60702. Skip miscellaneous. 60703, vehicle renter 60704, and then for miscellaneous I'll do 60705. So notice I'm overwriting the numbers in here so I can see the accounts on a very specific order. And that's what I'm trying to show you, that the account numbers actually have rhyme, reason, and logic to them. So let's go back into my profit and loss account report. Click on reports. Notice that the 2 accounts I want to use have numbers. The ones that I don't. And that's kind of how I differentiate between the chart of accounts I meant to put together and the chart of accounts that QuickBooks is forcing on me if I can delete the accounts. Go down and look at my travel. Notice that my travel is showing number 1 because none of the others have numbers. So of course, numbers take priorities. And notice that QuickBooks is now respecting the number sequence. All of these accounts need to have a natural number sequence, and especially if they're going to be sub-accounts. Make sure that you make the parent account a 00 or something like that, so you have plenty of numbers under that, so you can have a logical sequence inside of those parent accounts. And that's essentially how you organize your chart of accounts. And essentially what the chart of accounts means to you is the way you organize your categories of your income and expenses, so you can put them in a financial reports in ways that it's useful and meaningful to you. So anyway, that was a chart of accounts masterclass. Hopefully that was helpful. Hopefully you get acquainted with your own chart of accounts. That way you have a really pleasant experience using QuickBooks. I do sell my chart of accounts for advanced users, for accountants that like my own chart of accounts. I'll put a link into that in the description somewhere if you want to buy that chart of accounts and import it into your QuickBooks Online. If you're a brand new user, if you're not an accountant, I don't recommend you just import your accounts in your QuickBooks file because it can become a mess. So that's really for the advanced type of users. And if you need private one-on-one support to help you set up your own chart of accounts, I'll put my contact information, my firm's contact information down in the description, and you can schedule a one-on-one with one of the consultants in my firm to walk you through this process and make this a real a personal experience that pertains to your business. That way your chart of accounts doesn't have anything you don't need, only the stuff you actually need and understand. Anyway, hope this video was useful. Check out the description for all other videos that we recommend you watch after this as part of a multi-part series, and subscribe to the channel to be notified when I create another video just like this. Thank you, and I'll see you on the next one.